Aotearoa, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. The relief rally following the US-China trade de-escalation continues, for equities at least, but worries continue about recession and inflation. Investors want higher risk premiums, and it seems China is in no hurry to resume buying from US sources. But first up today, the overnight dairy pulse auction delivered similar but slightly lower results for both skim milk powder and whole milk powder that were achieved at last week's full auction, but basically confirming the recent shift, especially the upshift for whole milk powder. The April US CPI inflation rate came in at 2.3%, a touch lower than the 2.4% expected, and which applied for March. But that was largely due to fuel costs falling more sharply, down 11.8%. The costs of food up 2.8%, rents up 4%, and transport up 2.5% were all higher. Last week's Red Book tracking of US retail sales recorded a 5.8% rise from the same week a year ago. We'll likely see this fade as the tariff-induced buying eases off now. And the NFIB Small Business Optimism Index dropped in April to its lowest level since October 2024, but the retreat wasn't quite as much as was expected. The US household debt data updates were a mixed bag. Total household debt rose $167 billion from the prior quarter to a record high of $18.2 trillion in the first quarter of 2025. Delinquency rates rose from the previous quarter, with 4.3% of outstanding debt now in some stage of delinquency. US importers of Chinese goods still face much higher costs. The net position after the tempest and pullback is worse for inflation and negative for trade. Struggle is all ahead for global trade. In India, CPI inflation fell to 3.2% in April, and that's its lowest rate since before the pandemic. Food prices are up only 1.8% within that. The current overall inflation rate is now well below their central bank's 4% midpoint target. If it stays there, a rate cut in India may be on the cards. And in Germany, there was a sharp bounce back in the ZEW sentiment survey tracking in May, putting the unusual drop in April behind it. The survey indicates growing optimism for the next 6 months, driven by the formation of a new federal government there, progress in resolving tariff disputes, and signs of stabilising inflation. Nearly all sectors reported improved sentiment in May in Germany. In Australia, updated data there seems to indicate that Kiwis are losing the desire to visit there. That said, there were 104,600 visits by Kiwis in March, but that was a 9.3% lower rate than March 2024, almost 10% fewer than in March 2018, the pre-pandemic equivalent. For the year to March 2025, we made 1.367 million visits to Australia, a little different to the same year in 2024. It is a similar story for Aussies visiting New Zealand. In March 2025, that was 1.7% less than the same month a year earlier. Consumer sentiment in Australia has stayed weak in March, according to the widely watched Westpac Melbourne Institute survey. And we should probably note that good weather and favourable growing conditions in almost all regions of the world has boosted wheat production and is pushing down prices. They're now back to levels first achieved 10 years ago and are almost 60% lower than their peak in 2022. For similar reasons, corn prices are falling now too. The US Treasury 10-year yield is now at 4.50%, up 4 basis points so far today, and this rate may go higher. A Reuters poll of bond investors shows them increasingly concerned about both a global recession and rising inflation, that is, stagflation. And the price of gold will start today at $3,243 an ounce, up $20 from yesterday. And oil prices are up $1.50 at just over $63.50 a barrel in the US, while the international Brent price is just over $66.50 a barrel now. And the Kiwi dollar is now at 59.4 US cents, up 90 basis points from yesterday at this time. Against the Aussie, we're down 50 basis points at 91.7 Australian cents. Against the euro, we're up 30 basis points at 53.1 euro cents. That all means our trade-weighted index starts today at just under 67.9 and up a net 50 basis points from this time yesterday. And the Bitcoin price starts today at $104,161 and back up 2.7% from yesterday. Volatility of the past 24 hours has remained modest though, at plus or minus 1.7%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.